Let's get back to the data that just broke at the top of the hour around the Eurozone economy. We've been gradually building up a picture of strengths and weaknesses today. So on the GDP side, the quarter-on-quarter number for the second quarter up by 0.7%. That really much higher than the estimate. So GDP running much higher than was anticipated. Questions about the future, of course. The CPI numbers, the numbers there coming in higher than estimates as well. And that more worrying, of course. 8.9% is the inflation rate now for the Eurozone. It was expected to be 8.7. Joining us now with analysis, Marcus Ashworth, a Bloomberg Opinion columnist. I guess we should reflect on the strength that we've seen in these growth numbers, some of it from tourism, Marcus, that sort of revenge tourism showing up here, but real strength in particular coming through in some places, Spain and in Italy.
Yeah, it's very much the southern part of the tourism strength, clearly, as you said, revenge holidays indeed. I could hear them this morning. The planes going over my house have definitely increased. But, you know, for sure, there's also not just tourism, but it's just opening up the economy. That trend is quite strong from the pandemic, you know, finally been over. There's a lot more activity going on. The outlier here, unfortunately, is Germany at flat, and I think that's something to keep a very close eye on. So, but let's celebrate for once a decent, much stronger quarter. How much of that goes through into the back end of the year and indeed into the winter is very much dependent, as always, as with inflation. As you can see, the numbers ticked up a bit there, 8.9. I don't read too much into that. I mean, Italy fell, for instance, so it's just bumping around. It's very difficult to get a clear-eyed read on inflation, other than the fact, as with growth, we're in the hands of what happens with the gas supplies over the winter coming from Russia.
So Marcus, does anything in this data change the calculus for the ECB?
Well, that's a good question. I haven't really thought about it that way. Not really. I mean, I think they'll take some semblance of hope, the fact that they did the 50 basis points and they've not walked straight into a horrible GDP number. So they'll be relieved that they've been able to do a sort of bold move. And it hasn't looked instantly terrible. Not to say it won't look a little bit scarier perhaps later in the year, but I think it does put the focus therefore back onto September and whether they do 25 or 50. And you could think certainly the argument to do another 50, if that's what they chose to do following the Fed, they could do that with a bit more confidence now.
They can run free, Marcus. They can run free on the beach of life because of this growth.